Hey friends, thanks so much for tuning in. As always, we do appreciate it. Rory, how you doing, buddy?
I'm doing quite well, John. I hope you are.
I'm doing well too, and we're very excited given all of the landmark events that really took place in the precious metal space last week. We invited Koos Jansen from InGoldWeTrust to join us to talk about and process all of the news coming out of Germany and otherwise. Koos, how are you?
I'm okay. Thanks for having me.
Well, thanks for taking the time out of your day to join us. First of all, why don't you tell everybody just a little bit about your website and the work that you do?
With my website, I started it in May or June, and it's primarily focused on the Chinese physical gold market. I've been a gold bug for about 4 years, I think, since 2009, and early 2013, I met this Chinese guy on Twitter who explained to me the workings of the Shanghai Gold Exchange. And so he explained to me how I could read Chinese reports and how to translate certain sentences and to digest all the numbers. And what I found was fascinating because I saw a lot of physical gold being withdrawn from the vaults on the Shanghai Gold Exchange. And immediately I knew this is the most important thing that is happening in the world right now, because the power is shifting from west to east, and what I saw was that also all the gold was heading east because the amounts were just incredible. And from that point, I started digging, and then I started my website InGoldWeTrust. It was first Blogspot, but now it's InGoldWeTrust.ch. And I did a lot of findings, primarily on Chinese physical demand, and yeah, I'm still working on it, and I'm really excited. My website has got a lot of how do you say it, attention worldwide. A lot of folks come to read it and comment, and so I'm enjoying myself.
Well, we post your articles as often as you write them, and I want to talk about this spectacular gold demand on the Shanghai Gold Exchange. You just wrote this the other day about the Shanghai Gold Exchange. The title of your article was Spectacular Gold Demand, 79 Tons Has Been Withdrawn on SGE in Week 2, 2014. And you write, and I quote, "This type of demand puts the physical gold market under severe stress, hence the scramble for gold in London a few days ago." Why don't you flush that out for us, and then we'll talk about this German gold situation.
Well, about a week ago or a couple of days ago, there was a publication on the website about some small premiums in London on 400-ounce gold bars. And there were a few traders that quoted that there was some scarcity for physical gold bars. And a few days after that, the trade numbers from the prior week, but these periods overlapped, came out, and so in the week, I don't have the data in front of me. Maybe you have it. I believe it was 6 till 10 of January, that trading week in China. 79 tons of physical gold was withdrawn from the vaults. Now, as I have extensively written about on my website, the gold that is being withdrawn from the Shanghai Gold Exchange vaults equals Chinese demand. The structure of the Chinese gold market is such that this is the same. The amount of gold withdrawn from the vaults equals Chinese demand. There are a few rules the PBOC created which make it like that. For instance, import has to be sold firstly over the Shanghai Gold Exchange. Mine supply also firstly has to be sold over the Shanghai Gold Exchange. And once the bars have been sold and are being withdrawn from the vaults from the Shanghai Gold Exchange, they are not allowed to re-enter. Am I still there? Because I suddenly hear something dropping out.
You're still here.
I'm still here. I will continue my story.
Okay.
So the 79 tons, that equals Chinese demand for 1 week. So we also saw around New Year, around our New Year which was of course the 31st of December. We saw a shopping spree. There were jewelers in the mainland that discounted some gold products, and a lot of physical gold was sold around New Year. And this relates, and the Chinese New Year will actually start. The lunar year will start at the 31st of January. So in the run up to that, my sources said to me in the mainland, we'll have another shopping spree for when the Chinese New Year will be celebrated. So and we're in the middle of that. So we had 79 tons of physical demand of gold in 1 week, which is just, it's crazy. I mean, weekly global mine production is not more than 55 tons, and the Chinese demand 79 tons of this gold in 1 week. So
Wow.
and again, it's just so much. And I've been tweeting the last few days on Twitter, asking somebody to please to debunk my research, because the numbers are just so big, and there's nobody who can debunk it. I mean, so please tell me it's not true. Because do you understand what I'm saying? It's all the facts are there, but the price should react, or it should hit the mainstream media or whatever. But it doesn't happen. So it will slowly happen, I think, but we'll see.
It's an astounding demand for physical supply. And last week, some really earth-shattering information broke, and you're the first person we've had on to talk about it. What did you make of the fact that on Thursday, Zero Hedge ran with a headline, "Precious Metals Manipulation Worse Than Libor Scandal, German Regulator Says"? That was Elke Koenig, the German regulator, who went public with that. Of course, we never heard Bart Chilton or Gary Gensler at the CFTC make similar statements, even though we know it's true. And then on Friday, perhaps even more earth-shattering information broke as Deutsche Bank announced that they were quitting the gold price setting, the twice-daily gold price fix, as regulators investigate that gold price fix. Two pieces of earth-shattering information as this paper Ponzi begins to crumble.
May I add another thing that you can also find this on my website. According to the Financial Times, Bafin, which is the regulator in Germany, asked Deutsche Bank for some to look at into their books. So this already started in December, and now in January, Bafin comes out with we're going to research this price manipulation, and Deutsche Bank drops out. But the fact that Bafin did an inquiry for or a request to look at the books of Deutsche Bank in December is also really important.
Do you think that the paper Ponzi is beginning to crumble? I mean, isn't this exactly what we've predicted when we say the end will come more quickly than people can imagine? I think this is one of those earth-shaking moments in which we might look back in 3 months, 6 months, or a year and say, that was the beginning of the end. If these criminal banks aren't going to remain on the same page together and they start to break off and turn against each other, that will be the end of the manipulation. Do you think I'm onto something?
Partially. I think you're right in the fact that it is going to happen, but with all these scandals, I mean, I thought the same thing when Libor came out. I thought the same thing in 2008 when everything crashed. And the fact is that 99% of the people who are part of the real economy don't really know what's happening. So it can take a few more years, but you can really start. You can really see all the pieces falling together. Now of course, a lot of other commentators will wave it away as, oh, there's no price manipulation. It's just something Bafin said. But this is going to be this is coming out. This is slowly, these things are coming out, because lying is not sustainable. It's as simple as that. So and the fiat monetary system isn't either. So it can take years, but it certainly will come out.
It's kind of mind-boggling to me that an economy as large as Germany, and with a regulator at the very top of an economy that size coming out and saying, that there is manipulation, that wouldn't have an immediate effect over everything. It just astounds me, and I'm not sure why or how that is. And I want to take a step back, Koos, because the first week or the second week of January, the 6th through the 10th, there were 79 tons moved through the Shanghai Gold Exchange. There were only 55 tons that were mined, according to what you just said. So that means that there's, 24 tons? There's a 24-ton difference. And where are those 24 tons coming from?
Well, this is always about the gold supply. It's not only mine supply, but it's all gold ever mined is still above ground, and it's too precious to throw away. Gold is never consumed, so all the gold that is ever mined is still above ground in somebody's vault, and that's roughly 170,000 tons. So potential supply on every given moment of the day is 170,000 tons of gold. So the gold can come from everywhere, and everybody's going to sell at some price. And you just said you're astonished that something news like this comes out and nothing happens, and it's because the price is still completely controlled by the paper markets. That's why, everybody knows what's going on. It's just a matter of it has to unravel in a way, and we'll see how that goes.
I want to ask you guys about this. Sometimes I think, Koos, it's our job to remind people of even recent history, because so much happens so quickly these days that it's easy to forget. Well, that it was just about a year ago now, in January 2013, that Germany officially asked the Fed, the New York Fed, for their 674 tons of gold back. And the response was, well, we're going to give that back to you over the course of, I think it's 7 or 8 years, and the first shipment was half as much as what was promised, and they weren't the original bars. They were melted down, new bars, and terrible excuses were given for that. Do you think that what's going on now with the regulators in Germany admitting that the precious metals manipulation, in their words, is even worse and more severe than the Libor manipulation, do you think that all has been spurned from this fact that they've realized that they may not get their gold back at all?
I'm not an expert on Libor, so I don't know if this manipulation is worse than Libor. It would be kind of the same, or maybe it would be worse because it's about precious metal, which is real money, and Libor is about fiat money. Anyway, but I think what we're seeing is it's a financial warfare, and on the surface, all these countries are happily married and they smile at each other, but underneath the surface, it's a financial warfare. Germany asks its gold back. This is a complete disaster. I mean, they don't get it back, or they get it back in 7 years, and it's remelted. So it's all fishy. And then they started making statements like we're going to investigate the gold price manipulation. This is financial warfare, and we can see the same between the U.S. and China in other ways. But I think the world has been in this financial warfare for years now.
Yeah, I agree with you. And Jim Rickards has been noted as saying exactly the same thing. In fact, he once told Eric King in an interview, which I wrote at length about because I found it a little disgusting. He noted that what the officials in the U.S. government could do and at the Fed is just keep all the gold that they have in store for other countries. Just keep it. And he was specifically talking about using other people's gold to reback the dollar, which is obviously criminal. And I don't know that he was advocating for it, but I think that as somebody that has the ear of the government and who has consulted with the government, one could argue that that is exactly what Jim Rickards was arguing for, is that if the dollar needed to be rebacked by gold in this economic war, then they could just keep the gold. And maybe that's one of the things that caused Germany to ask for their gold back. Certainly, countries are losing faith in each other and in this government and in this world reserve currency known as the dollar. What is your take on the war for gold at $12.50, that price point? We've talked to Andy Hoffman at length about this, and the silver war at $20.
Silver, I don't know. I don't really pay too much attention on silver, although I should, because I just found a fascinating thing on the SCE. Silver trades at a 5% premium to international prices. So there's a lot of physical demand for silver in China. Then, what was your question? Sorry, I forgot it.
My question was just about the war for gold and the price point at being $12.50.
Oh
$12.50
yeah,
seems
yeah.
to be a much defended price by these central banks.
Yeah, well, what we're seeing right now is such enormous physical demand by China throughout the entire year of 2013 and now also in 2014. This cannot go on forever. And I also did an interview with Alex Stanchik from Anglo Far East Billion, who, maybe you guys read this, who visited Switzerland. So his company stores a lot of gold in the vaults in Switzerland and does a lot of dealings with refineries there. So Alex had a conversation with the CEO of the refinery, and the CEO of the refinery said it is really hard throughout the whole of 2013 to source the gold. Sometimes, they have to bring all the scrap they can find, and they even get gold bars in from that were stamped in the 60s. So the CEO is implying the gold bars that are being brought to the refineries now are coming from the back of the vaults. Now we heard the same thing from Kenneth Hoffman making a statement on Bloomberg, saying all the London vaults are empty right now. Of course, there's supposedly there's still 700 tons or 800 tons in GLD that could go to China, but this huge demand for physical gold, this price won't last forever, and I think within 6 months it will go substantially higher. And but I'm not comfortable with doing price forecasting. I'm a researcher. I do the research. I hear a lot of people doing forecasts, and most of the time they're wrong. So I don't like the forecast. But of course, this is going higher, and within 2013, we will be above 1250. Sorry.
Sure. I just want to remind people that we've been talking about the manipulation of the precious metals for as long as we've been talking. And I know there comes a point where people feel like that story's long in the tooth. But again, last week, groundbreaking information, epic, earth-shattering information coming out of Germany with regulators saying the daily price fixing of gold, the manipulation of precious metals, is worse than the Libor scandal. Those were the words of Elke Koenig, and then the very next day, the Deutsche Bank says they are stepping aside and will no longer take place in the twice daily gold price fix, which happens in the city of London. And I think it just needs to be stated, everything we've been talking about now for years has now been proven true. The whole world knows it. That's actually the conversation I just had with Andy Hoffman recently from Miles Franklin, is the whole world knows it. The COMEX is a joke. The LBMA is a joke. All the gold vaults on the planet are rapidly being depleted of their supply, and the whole world knows it. The men behind the curtain have been exposed, have they not, Koos?
Yes, I think they are, and I think the LBMA is going to be replaced by Shanghai. You see, not only all the physical gold going to Shanghai, but also they're really melting the bar from 400 ounce London Good Delivery bars to 1K49 bars, which is a 1 kilogram bar of 999 purity. And they don't only want all the physical, but they also want the pricing power. So they want to move the whole paper market towards Shanghai. So you can not only see the physical gold going to the east, but you can also see what I will see. But this will take years. The paper market will also go to the east, because China can accumulate as much physical gold as they want, but if the West still controls the price of that gold, it doesn't make sense. So they also need the pricing power. So that's their next step, to get more pricing power through the paper markets.
Well, that's right. And again, I'm going to hit it one more time because you had said that you don't like to make predictions on price, and I agree with you 100%. We don't need to make any more price predictions because we know what's going on. We know the reality. These lower prices, this paper manipulation of the metals that has resulted in low prices, artificially low prices of both physical gold and physical silver, just need to be seized upon by those who are in the know. Because again, the president of Germany's top securities regulator, Bafin, claimed that gold manipulation is currently worse than Libor-rigging, and I end quote. Now let me ask you this. The Chinese government officially holds 1,054 tons of gold. Speculation is that they hold at least 2,700 or more tons. What do you think is going on right now? How many tons of gold do you think China holds, and at what point do they come public with the real number?
Well, this question has been asked to me about 1,000 times this week. First, let me say this. This is pure guessing because from the SGE I have evidence and I have numbers and I can research and I can make my own facts. But the numbers for the People's Bank of China is still pure guessing. I'm afraid I can't make any more of it. But I think they have about 3,000 to 4,000, around 4,000 by now. But I don't have any hard evidence for it. So it's just pure guessing. The other day I published also on my website an article from Zhang Bingnan, which is a Chinese, probably I pronounce his name wrong, but he did a study in 2012 and he is the vice president of the China Gold Association. And he did a study on official gold reserves of China, and he said I think they needed about 6,000 tons by 2020. So I don't know how much that would have be that would have be 2,700 tons maybe by now. But I think that study was done in 2012, and I think what happened in 2013, which was spectacular. I mean, Chinese demand for physical gold doubled, so I think everything completely changed in 2013. And yeah, my guess is, but again, it's a guess. I think the People's Bank of China bought about 500 tons of gold in 2013 alone. And they will be somewhere around 4,000 by now, and they will come out before 2015 with another statement. But I think the moment they come out is the moment when they have enough. So maybe they only come out when they have the same as the US or more than Germany, or that will be the moment. Some say they will report every 6 years. I think it will be a strategic moment.
It's all yours, Rory.
Singapore is supposed to be opening up a new physical gold market, the same as the Shanghai Gold Exchange. And do you see that having an effect on what's happening with the Shanghai Gold Exchange, or is that just going to be a secondary market?
I think it's going to be a secondary market. I don't think it will have any effect on the Shanghai Gold Exchange. I know Singapore. I don't know much about Singapore, but I know they want to become a major precious metal trading hub in Asia. Well, good luck to them, because Hong Kong is trading astonishing amounts, and it will be hard to kick them out of the first place. And actually, that's all I know about Singapore. I don't think, also because they, for example, the trading numbers, the import and export numbers from Hong Kong are free, are publicly available, and for Singapore you have to pay for them. So I don't even know how much is going in and out. So I'm afraid I don't know much about Singapore.
Jim Sinclair has taken an executive level position with the formation of the Singapore Gold Exchange, and Russia also has announced that they're going to open up a gold exchange, as well as Dubai. So now we've got four. Once those three come online, we'll now have four physical gold exchanges outside of London and New York. And I can't help but believe that it's going to be a complete shift from west to east. And
Yeah.
would you agree with that? Or I mean, and where? And the second part of it is once again, where is the gold going to come from?
Well, the gold is the question. Where is the gold going to come from? That will be determined. That will be settled by the price of gold. Once the gold is gone and there is no supply left, the price will take care of it. The other thing is, you're completely right. I see a lot of power moving towards the east. So Russia is opening up a gold exchange, Singapore, but you see also a few Middle East countries are now creating their own currency, comparable to the euro, and they say, "Well, we're going to peg it to the dollar," but I think eventually it will be, of course, floated against the dollar. And we just the president of China, Xi Jinping, also just visited the Middle East and addressed that he wants to create better trading agreements with them. So you see the whole East, not only the BRICS countries, also the Middle East. Everybody's teaming up now. Also, because the relationship between Saudi Arabia and the United States is cooling down. So you see the whole Eastern Hemisphere, so to say, teaming up a little bit in prior to this fall of the dollar hegemony.
In the time we have left here, Koos, let's talk predictions for 2014, and I want to ask your opinion on the COMEX. We know quantifiably that the physical gold left on hand at the COMEX, I think currently is about $500 million worth. I mean, it's a rounding error based on monthly money printing by the Fed and other governments around the world. Does the COMEX officially default in 2014 at some point?
No, I don't think so, because I think it's in the rules that if somebody can't deliver the goods, like pork bellies or gold or silver or wheat, it's just going to be cash settled. So that's a story about the COMEX. So the thing we see with the COMEX also is that open interest is falling throughout the year. So it will be just less trading on the COMEX, and all that paper trading will also move to the east, I think. Maybe one also nice thing to add is that Shanghai the Shanghai Gold Exchange is opening up an international section of their exchange in the free trade zone in Shanghai, where everybody over the whole world can trade gold contracts in yuan denominated. So that those are also big steps in the trend proceeding.
That's huge.
Yeah, it is. It is huge, and I think it plays into exactly what Rory was talking about with the opening of these various exchanges that will compete with the COMEX, that will be competing exchanges, and as long as they're run honestly, this sea change that we've described in the process of happening will play itself out here in 2014, and the end result will be a loss of control over the paper manipulation of the metals by these big criminal banks. That's my hope. I wonder if it'll translate into reality. Koos, thank you for joining us. We appreciate your time and your expertise. Guys, you can find Koos Jansen's work at SGT Report, but of course we'd like to drive traffic to Koos's own site. Koos, tell them how they can find you and remind them of your URL.
Please go to my website. It's InGoldWeTrust.ch.
You heard it, guys. Go to his website. Give him some love. Koos Jansen.
Give me some traffic, man.
We're there for you, baby.
Okay. Thank you, guys.
Koos, thank you, and you take care, buddy.
Okay, thank you.
Bye-bye.
Okay, bye-bye.